Hey, everybody. Thanks for tuning into this podcast again. I just want to tell you on this particular podcast, there's actually a drinking game sort of built into it. If you want to play the Futures Edge drinking game, you take a drink every single time we say either capitulation or Scotch-Shellity. Make sure it's not heavy liquor. We'll see you guys in the show.
Welcome to the Futures Edge podcast. I'm Jim Urio, and as always, my co-host and the brains behind the operation, executive producer, Bob Iacchino. Today we have Bill Baruch, who is the president of Blue Line Futures and Blue Line Capital, as an old friend of ours. And we have a hell of a lot to talk about. I mean, these have just been wildly exciting couple of weeks. Everything's changing. Bill, if you had to pick one thing that's the theme right now, what do you got?
Volume, capitulation. And going back to last week, unless you have a futures trading platform, you may not be able to see it, but the commodity exchange volume on the Russell 2000 was a record for the week. And the S&P futures and the NASDAQ futures both had the most volume last week since March 2020. I also saw data from Bank of America came out last night for the week ending June 22nd, $17 billion in outflows for that week ending June 22nd. And that was the first week of outflows in 7 weeks. So I think we got some capitulation, through that quad witching, through that May CPI number. And that's, I think, why we're ripping higher here today, trying to find a bottom.
Wait, so hold it. So if I'm paraphrasing you, are you saying you think that could be an indication that the bottom's in?
I'm saying a bottom is in. And I think we can rally now into the June CPI number coming out in July. And my narrative has been it's an inflation showdown at Jackson Hole at the end of August. And what really matters is this June, July, and August inflation numbers that come out July, August, September. So I think inflation is going to cool. And look at commodity prices. I mean, it's been a bludgeoning. I think the Bloomberg Commodity Index is down, 10% this month already. So you got prices coming in. And, from this month over month increases, look at where, the crude was in March, copper was in March when the war started. And then, a lot of this has just been, we're baking through the system for months now. I think inflation comes in and it's going to allow the Fed to pull their foot off the gas, allow the market to go higher. So then that would be the case for the bottom and a good buying opportunity in commodities here over the next couple of weeks.
So it's interesting that you say that, because I was on Scott Shellity's show today. And one thing I was pointing out is that the 5-year break evens, which is but for people who are watching, which is the nominal yield of the 5-year treasury, the difference between the tips. And the market kind of uses that as a gauge of what expectations are, inflation expectations are out for the next 5 years. And 2.5, 3 short months ago was about 3.8. Now it's about 2.8. And the day after, June 13th and 14th, which was the trading days after that disastrous June 10th CPI number, it went from 320 to a low of like 2.7. So that market is telling us something. Also, over the last 2 weeks, we're starting to pull tightenings out that we had previously priced in, particularly ones like from a year out. Like now there's only a 10% chance that in July of 2023, there's going to be the terminal rate 3.75 or above. It was 40% just 2 weeks ago. Are these all signs that we've hit peak inflation and now we're starting lower?
I think so, at least for now. And that is the lowest level on this 5-year break evens on the year. And I think right now the pocket to work through, if inflation cools, we get a September pause. But guess what comes around the corner is I think it's an energy winter. I think it's gonna be an ugly one. I mean, obviously poor policy decisions for years, in Eastern Europe, throughout Europe, and the dependence on Russian oil. So I do think that energy and prices are going to remain very high. And they're going to be really reinvigorated from where levels they are when the winter comes. So I do think inflation reemerges. But I think we have a nice path forward, at least for the next, few months.
So I think what we're saying kind of is that, they had to adjust demand. They had to bring us to even probably recessionary, probably or possibly. I'll leave you to answer that. The recessionary territory in order to get demand back in line with supply. Are the markets telling us that the recession is here? And paradoxically, are they saying that the stock market doesn't necessarily have to hate that because if the Fed pivots, it goes higher.
Yeah, that's a great point. And you mentioned Scott Sheldry's show. One thing, him and I join him usually on it was every Tuesday, and when we talk about this recession, almost every single time we're on there every week. And my theme is we're in a recession. I don't need two quarters of contracting GDP to call it. We're in a recession. The stock market looks ahead 9, 12, and 18 months. The stock market is pricing in this recession already. So it bottoms, and I've for clients who've been sort of really nervous about the market, the housing market, I've given them a comparison. Just, I don't think this is anything like the great financial crisis, but when the market fell off 2008, actually 30-year bond yields trickled higher at the worst time of the market. And then they rolled over as the housing crisis got worse. The only reason the stock market from that initial really big plunge ended up falling off a bit more was because the massive bankruptcies throughout the banking sector that happened. So that's not going to happen this time. So really this market's going to find a bottom well before, yields start really coming in. If those yields start coming in, it's going to fuel it higher. So I think the recession is here. The market's trading like it's a recession, and that puts it forward a better picture in the future here.
And 2 points to bring in on top of that before we bring Bobby in for a question, because you mentioned energy. I'm sure he's going to want to weigh in on that. Goldman came out with a piece last week saying the last 17 times the stock market has been down more than 15%. 11 of those times it bottomed as the Fed pivoted to neutral or pivoted to dovish from hawkish. I think the market needs that. First off, don't you agree? They need some soothing words from the Fed that there's an end in sight before the bottom's really in.
Yeah, they need to stop moving the goalposts, and that I'm waiting for that. I think that's when we see this inflation number come in. That's why I think one of the reasons underpinning stocks here today and through this week, not only the capitulation narrative, but commodity prices coming in. They're already starting to discount the inflation in this price action. So I think that I feel confident expecting CPI to be cooler than expectations, or coming in pretty well relative to that May number. And that's going to allow the Fed to pause. I mean, I think there's definitely some members on that Fed committee that were doves, want to be doves, and have turned very hawkish because they have to, not only for political reasons and just to save face. They're ready to become, at least neutral right now, and they're ready to pivot. I mean, you even saw that from the Atlanta Fed President Bostic, who made a couple comments. It was back in May. The market lifted pretty good. He's pretty influential there. And I forget, I think it might have been Esther George, who is now retiring as well. She was the Kansas City Fed president, but she made some pretty, that they're ready to pause. So I think we could start hearing the echoes. That's why it's an inflation showdown at Jackson Hole, because if we get two softer inflation numbers, then we could see them pivot at Jackson Hole, maybe, as a pause going into September.
Bobby, you want to weigh in? Because I remember I said I had 2 points. I could only remember one of them. It's Friday. We record this on Friday afternoon. What do you got?
First of all, this is the first time I've seen Billy since I left Chicago. So it's good to see you again, buddy.
Good to see you.
Used to get to see you at least once or twice a week in the recording booth there at the CME floor. But I want to push back on one thing before I ask you a question. And I want your clarification. When you say we're in a recession now, you don't need 2 consecutive quarters of negative growth. Number one, does that mean that that's your definition? Because it is mine. It's 2 consecutive quarters of negative growth. And number two, are you saying that because you think this particular quarter of GDP is going to be negative? Or you're basically saying the term doesn't matter, people are hurting?
Term doesn't matter, people are hurting. And I would lean on that 2 quarters to say, hey, an official recession has happened. But listen, people are hurting. The market is hurting. I'm talking to clients that certainly feel like they're in a recession, whose wealth portfolios are managing them. And just, even though we've actually held ground, we are doing very well this year relative to their benchmarks, and people just are nervous about the prices they're paying at the grocery store, their gas prices. The economy is hurting, and that's where I think the recession term is.
Jobs market isn't though.
Yeah.
Just that.
Well, that's the thing. So I don't think that the National Bureau of Economic Research is going to claim this as a recession, because unemployment rate's at 3.6. And I don't think they'll actually come out, even though I'll still stick with that 2 consecutive quarters of negative growth as the definition. But Neighbor has said that they actually look at the unemployment rate as part of it. And then I go back and I look at the savings rate. The savings rate right now, this past month of data that we got, lowest level since September of 2008. Now, interesting, the level of savings is still good, but the rate of savings has declined dramatically. Now, that implies to me, and I don't have anything to back this up, Billy, but that implies to me that this is hurting sort of in a trickle up way. In other words, people with the least savings are now going into debt. And then the next level is declining their savings. And the next level is decline a little bit. And then you've got the wealthy who, yeah, they're saving a little bit less, but it doesn't really matter to them. So I guess my question then becomes, if you think, I love the way you worded it, that we're at a bottom, we're not necessarily at the bottom. I called for a bottom 3 weeks ago, and I've still said that I don't think I'm wrong yet, because even though we rotated and made new lows, it just said to me that we're actually declining in the possibility of more declines. Is that what you're saying?
I'll say right now, we are moving to 3,900 in the S&P on a closing basis. That's the gap from previous Friday. So that's a really good sign. I want to see that decisive move for the bottom, I mean, at least a bottom right now. But back to the recession terminology. Goldman Sachs in a note actually put out earlier this week that they increased their odds of recession pretty much, basically twofold. Let's generally call it.
Yeah, it was like 70% or something.
Yeah. I actually have the numbers here right
Quick
now.
time out though. Would like to say that the two of us, Bobby and I, Scott Shelley, we're way ahead of Goldman Sachs saying exactly when the recession is coming through. And I'm not a big searcher for attaboys. Oh, who am I kidding? I am. But come on, the writing was on the wall. I don't know what the hell was taking those guys so long, but Billy, go.
Well, that's also a capitulation thing. The headlines are now making the recession headlines are now making it. You're hearing every newspaper, every media outlet, every bank talking about a recession. That's just another word, another version of capitulation. It's a volume of headlines. So, and then in that terminology, it was to increase the odds of recession from 30% from 15% this year, and 48% to 48% from 35% over the next 2 years. So they're basically saying 50-50 shot of recession over the next 2 years. But back to the unemployment, they expect unemployment on average, this recession is going to be front loaded, and that's what I agree with. That's why I'm saying the market is realizing a recession right now. It's a front-loaded recession because it's from the Fed tightening. It's instrumented by the Fed, and then in something like this, unemployment will rise on average about 2.5%. So I think it's very fair to say we'll see 6% inflation, and it'll be called a recession.
This question, I got a question for both of you. I'll start with Billy, but Bobby, I want you to weigh in it too. Because what I said again, and I hate to bring up the name Scott Shelley 4 times in one show. This is the last time I'll bring up his name. Believe me. When I was talking to him today, my belief is that we are going into recession if we're not in a recession, as you said. I believe that recession is not going to be particularly deep because when we saw in the Great Recession, that was just decades of leverage built up in housing that needed to be worked off in an illiquid asset over the next few years. And it was terrible for a long, long time. I believe this recession will be relatively shallow because I don't see those positions built up, but I think it could be long unless the government flips on stupid energy policy regarding fossil fuel. Bill, can you weigh in on that? And then Bob, you.
Yeah, right now, they're trying to throw the kitchen sink on it, and I think what they've done is actually extremely bullish. They've drawn down SPR to the lowest levels with 1987. They're doing this.
Oh, you're saying bullish on crude oil or bullish on the economy?
Bullish on crude oil, and that's why I'm saying we're going to see a negative impact on the economy through maybe the first quarter of next year. It's going to be Europe that may hit first. Our exports, to Europe, if we stop exporting at some point, they're going to get hurt more, and then you really could see effects. So that's why way I'm looking at this right now, and my focus is how am I trading this for the next 3 to 4 months. It's hard to look much past that. And I was just on CNBC before I came on here, and one of the things they were talking about this sort of commodity move down, and I'm focusing on the commodity move down as a buying opportunity over the next few months. But energy, really, I think is going to be almost unstoppable in this wave of policy. Other commodities, as inflation picks back up due to energy, could actually get hurt because we're deepen into a recession where energy caused by energy. So as we go into quarter 4, look at these. So the SPR 1987, I think it's the lowest level. You have this gas tax that they're saying is going to make it a little cheaper. It's all political, but at this point too, it's encouraging more demand through this driving season, which then is going to prop up prices further. So I think that where they're heading here in energy policy is just going to be very ugly.
Yes, Bobby, even when they try to do something good, they're trying to handle what's a supply problem that is potentially a self-inflicted wound by increasing demand with the gas tax. Next thing they're going to do is to send people checks and gas cards to increase demand even further, right, Bobby?
Well, sure. That's what the gas tax holiday is likely to do. It's not going to decline people's usage of their vehicles. And encourage carpooling or public transportation where it's available. It's going to allow people to go, okay, I'm 30 to 70 cents cheaper a gallon, depending on which states join in on the tax holiday and which states you live in. And I say, okay, I got my little break. I'm going to go ahead and drive. So that right there in and of itself increases demand. And I think the convoluted energy policy is where I completely agree with your premise, Jim, and Bill's conclusion. Bill's got clients, right? He's got to get them a return. And I totally agree with the buying the dip on commodities for either reason. And what I mean by that is crude oil, I don't have a position in crude oil right now, but as I look at it, I'm looking for places to buy it. I'm not necessarily looking for places to short it. And granted, my buy levels are quite a bit lower than we are right now, somewhere in the range of $12 or so lower than we are right now, but it's still a buy. If we get an easing of the crude oil structural issues, then the push comes for electric vehicles again. And then you got bids and things like copper and short-term bids in most of the commodities. And then you have, again, this shrinking supply, which brings crude oil right back up. Like over the next 2 or 3 years, I can't see too many scenarios, maybe 1 or 2, where commodities actually give up the, what is it? Give up the goat, give up the game. It's like give up
the ghost is what I thought
it's
it was.
Ghost.
I don't know what that means.
I'm going to go with goat since I'm an immigrant kid. I'm going to say give up the goat. And yeah, and I think the inflation bug is here. You know, Billy, we talked a while back, and I keep asking the question of most guests, and I'll ask you the same question. What does inflation success look like for the Fed? Is it 4.5%? Is it 3%? Because the idea that they're going to get it down to 2.5% and still have unemployment at 4 or below is, I think they know that's insane.
I did a little history lesson for clients in my morning note yesterday on Paul Volcker. And one of the things that I thought that was extremely important this week that nobody talked about was that Fed Chair Powell said he would never compare himself to Paul Volcker in any way. I think that should have been talked about much more because it's sort of unavoidable. People much less smart than him, but much higher up have already made his bed for him with that energy policy. But overall, you know, what he's saying is he's going to take his foot off the gas as soon as he doesn't want to be known for the worst recession in U.S. history and an unemployment rate at 10%. So they're going to massage this in every way that they can. And for them, back in 1982, 83, inflation was at 12%. It came back to 8%. And that was almost a little bit of a victory there. So if we're at 8%, you know, we see 4 or 5%. I mean, it's going to be 4.9 PCE is a very watered down number. It was 4.9% for I think what April. We're to get the May number here next week. But yeah, if we see something at back 5%, 5.5% or lower on that could start to be, moving towards a winning streak.
A couple things I wanted to say first is that the CPI, we act like it's running around 8.5. The rents and rents equivalent portion of that, which is 33% of it was an increase of like 5% year over year, which is asinine. Everybody with a pair of eyes knows that it's much, much higher than that, and that's being calculated ineffectually. We're to inflation hedges though. Ethereum, Bitcoin, gold, silver, real estate. What are the inflation hedges if we're going to live through, as it appears that you guys are both saying, we believe another round of inflation is coming up? How do we hedge that?
Depends what the driver is. People are chasing energy stocks now for, on the wealth side. I have people panicking out of portfolios or want to, again, we've done very well relative to our benchmarks. We're beating it by double digits this year, but I'm getting new clients that have had very tough times, and they're coming from portfolio drawdowns 30-40%, and they don't want equity exposure. And I tell them at these levels, you need equity exposure. I wouldn't let my grandma get out of a 40% drawdown at these levels. And so at these levels, if you got to say where are the markets and what are we looking at? I think the tradable opportunity here is being long tech. I'm looking at, because the inflation narrative is going to cool. When it picks back up, what's going to be the driver of inflation? Is it going to be energy? You need to be overweight energy. And one of the reasons why we've done very well this year is I have 15 to 25% weighting of energy throughout the year relative to the S&P. That was started the year at 2. 2, and now maybe it's almost 5% now. So it really depends what's going to be the driver. And gold, people say gold stinks and gold never did what it's supposed to do. Gold did exactly what it was supposed to do.
Yep.
Gold front run their inflation, and that's the thing. If you have had gold in your portfolio for the last decade, you're very happy with it. So there's going to be another time where gold is going to perform, and that could be at the end of the summer when the Fed does start to pause, stop moving the goalposts. So I like having gold, and we use a number of different assets to give us mining and metals exposure.
So before I let Bobby in for another question too, you mentioned the NASDAQ. Later on in the show, I'm going to give my trade, and it's a NASDAQ trade. What you're saying, if I can paraphrase, and let's see if you agree, is that the NASDAQ was suffering obviously disproportionately because tech stocks, growth stocks hate rates going higher and the belief that rates are going higher still. So they were getting pummeled by that. If we're getting this brief respite and that perhaps rates aren't going higher as quickly as we thought, then the NASDAQ could respond very favorably to that, correct?
Yeah.
Okay, good. Yeah, one word answer. Well, no one in our business ever gives one word answers. That's fabulous. Bobby, what do you got?
Billy, can we have a recession without an increase in crude oil prices? And I know that historically we can, but if you look at the last three, 2001 recession, 2008 recession, 2001 crude oil increased almost threefold, just short of threefold prior to the recession starting. 2008, obviously we all know what happened. 2007, 2008 was the 139 to 143 a barrel crude oil. And now we have this potential one.
But Bobby, before he answers, why does that happen? Why does crude go up if we're going into a recession?
Well, I just think recessions are preceded by growth. And I know that kind of sounds stupid, but recessions come when the Fed adjusts policy after a huge growth run, right? And we know that at least the recent recessions were essentially caused by the Fed. I don't think that's a controversial statement, is it, Billy?
No, I mean, you have the growth, what's maybe more recent times, you have what's pumping the growth and I mean, people are demanding energy, and then there's other things that have taken place around that time. I mean, the world runs on energy. It was a great commercial by Energy Transfer out in the national championship football game. And I've hit on as something, all year long, and everything is made from energy, petroleum products. And I mean, it's from plastics to, look at your desk. I can probably pick 10 things on my desk right now that were made from petroleum. So, I mean, it runs the world, and as those prices go higher, it's going to drive up the cost of living, and that's where recessions come. Real quick, going back to Jim, what you said with the NASDAQ, I gave you one word answer. Yeah, it's the place to be. But a couple of things I'm watching on the NASDAQ is very closely is the relative strength of the Qs to staples. And there was a little bit of an inverse head and shoulders on this chart here this week. And that's something I'm really looking at, where you get a move higher. And in the NASDAQ and the staples are not going to really pace with that. You're just even some selling in staples to put more cash into tech stocks. So you get this this power thrust in the NASDAQ relative to staples. To me, it's been a precursor to a continued move. So we're getting that pretty nicely today as the S&P is breaking out about 3,900. There's also, like I mentioned, the capitulation, the volume. But even one of the reasons why I think that relationship is so important, well, actually two reasons. First, the NASDAQ, obviously the biggest stocks in the world are with the NASDAQ, and you're going to be selling some of your safer assets to buy more risky assets, and that would show through that strength. And then both the S&P and the NASDAQ, when they broke through the new lows last week, they kind of both were in no man's land. And there's no retracements, there's no volume pockets, there really wasn't much. What's going to tell us that there's going to be a low? So you can start looking at some of these different relative strength indices or comparisons. And the Dow, though, wasn't in no man's land. The Dow did come back down to the pre-COVID high, and it was also, I think it was a 382 retracement as well. So I mean, there was some good things to look at and anchor against here today, given that we had the volume capitulation last week and through this week.
So can you wind that a little tighter for me? So you're saying yes, NASDAQ, no Dow and staples?
I still like the Dow off support, but because the Dow could be, I mean, one of the best stocks performing this week is Salesforce, up 12, 13% maybe. So, I mean, I think the Dow can perform very well, but I mean, it's going to be outpaced by the NASDAQ in this move. I mean, today, I mean, you got 2%, was it almost 2.5% on the Dow, and you're about 3% on the NASDAQ.
So yeah, and okay, so I get it now. You were saying yes, NASDAQ, but staples, not so sure of. That relationship was got it.
Staples
Now, can we talk about cryptocurrencies? Are you still getting calls from clients who want to be involved in crypto, or has that breeze change direction?
It hasn't, I wasn't getting calls so much from clients to do it. It was conversations I had with current clients asking me, about what I'm doing. I've been invested on and off in crypto since 2017, and it's been a great ride. I didn't get out it enough, when it falls as much as it did recently, but I woke up Sunday morning, gave myself a Father's Day present and threw a slug at Solana and Ethereum. And I mean, so I continue to trade this thing, and I think there's good value down here where we are. Just that was my way of getting some risk on, given that the markets were going to be closed, or futures weren't open yet Sunday night, because this was Sunday morning. And so, yeah, I think they're going to follow. It's a risk asset. We've seen it. It's a risk asset. It's also a lot of things are going to rely on the U.S. dollar. The U.S. dollar has been extremely elevated and consolidating. If the dollar rolls over, I mean, I think crypto is going to do very well, and stocks are going to do very well. As well, we're going to have to see rates come in a bit more, and there's definitely some support at 3% psychologically, as well in the 10-year, as well as as a trend line there too.
Bobby, I just realized I'm remiss because with Billy, who I respect a ton, but I know that, normally on this podcast, we have a couple icebreaker established credibility questions that I totally skipped over at the beginning. And I think I do that because subconsciously, I think Bill is a serious person who's very serious and goes after things.
Bill already had his credibility. You didn't have to ask.
He has his credibility. That's exactly what I'm saying too. But I think we should go back to that too, though, don't you think? Because we have to know, what his favorite show is over the last couple of years. The best show that you watch, because if it's something stupid, we just have to look at everything else you say with a grain of salt. What's the best show you've watched on television over the past 2 years, Billy? And dogs or cats? What do you prefer?
Oh man, I guess more recency bias. One of the better ones was Ozarks.
But there was nobody to like in Ozarks. Who did you like?
Oh, man, I guess it's a good question. In the last season, there wasn't really. You kind of hated everybody.
I hated everybody.
Yeah, but it was sort of like the what's the show Bloodline? The last season of Bloodline, you sort of just hated everybody too. Which was a great show for the first 2 seasons.
Yeah, I liked it because I go to the Keys a lot, so I love the Isla Morada shots in Bloodline. I thought it was very cool. Oh, Bobby too. We had Mitch Rochelle on the show, and he talked about Winning Time, the Lakers show, which I then went back and watched. Did you watch it, Bobby?
Fantastic.
It's unbelievable. It blows me away. And I had a buddy who was on the team back then, and I keep texting him about, is any of this true? And he's refused to respond to any of the questions about it, and definitely changed the subject each time.
Jerry West was supposedly pretty pissed about it, but I can't not like Ruth, even though she turned into kind of a, well, you know what, I'm going to leave it because maybe people haven't watched it, but yeah. I still can't not like Ruth. Just her one-liners are the best probably in the history of television. She's
a great character, and there was definitely some great scenes with her.
You didn't answer dogs or cats though, Billy. So go ahead.
Dogs for sure. Dogs for sure.
Okay, good.
Finish your sentence on the roof.
One thing I saw recently was the Adam Sandler Hustle movie, which I thought was surprisingly good. I saw that actually this week. I was it after maybe Tuesday's close or whatever. I was like, I need to forget about Mark. Sorry about that. So I needed to forget about markets, and I just
put on a trade.
Watch a movie. Hey, S&P is going out on the highs. The Nasdaq just ripped 40 through the highs. I mean, it's a beautiful day. It's a beautiful day. But I thought that was a great movie, and it was really cool seeing so many NBA stars all in one movie. Really surprised me. How good it was. He did cool. A really good job at it.
And you have a dog, right?
I don't have a dog. I got three kids, 3 daughters. The oldest one turns 5 in under 2 months. My God. Our youngest is 1, so it's 5, 3, and 1. Yeah, wow. we got enough of our hands full at the moment, but there probably will be a dog in our future soon. I'll have to get a male dog for sure to get some testosterone in the house.
I'm a man with daughters as well, and I have a female dog, and so I'm definitely a minority. Bobby, the next topic I was going to steer toward currency. We talked about the dollars for a second. Do you think there's anything else that's more interesting than that? Where would you go?
No, I like the dollar, and I'd like to come back to crypto simply because my trade is going to be a crypto trade. But the dollar for me seems to be not just about interest rates at this weird point in time because of the trade issues going on. So many more trade deals from what I'm hearing are being done in dollars, and emerging markets bond issuance, dollar denominated bond issuance have fallen off a cliff. And I find that interesting. Billy, do you look into anything from strength of the dollar and anything other than interest rate differentials, or is it just all interest rates for you?
I look at it, because it's always trading against something else. It's not just the dollar itself. So people forget that. And it's, where I see other central banks trying to tighten right now. So I think that's something that I think will, will underpin some of those other currencies. I do think that the dollar typically usually peaks at the onset of a hiking cycle. It's just we've had inflation where the goalposts keep getting moved. That's one of the reasons why I'm bullish gold when this goalpost stop being moved. But from a currency dynamic, I think what's going on with Russia and China right now, and I think it's not being watched close enough. So Russia's selling their oil, and they're going to sell it, at a
Every
discount.
barrel of it.
Yeah, they're going to get a discount. Asia, China, which is China and India, they're buying it hand over fist at a discount. They'll pay whatever currency they want from it. And overall, I think it's. I watched the U.S. dollar Chinese yuan relationship, and obviously the U.S. dollar strengthening quite a bit against the yuan. When it's very important to watch for the metals. If you trade the metals, you have to watch this relationship. And it strengthened quite a bit when they were going through lockdowns, and then pulled back, where the yuan strengthened against the dollar as they came out of lockdowns, and it's sort of consolidating right now. And I think one of the questions is are they really going to weaken the yuan a bit more because they can, and then they're going to sort of be able to kind of almost stimulate, because they are easing policy, and how does that affect what the commodities that they're going to be able to buy. And so I'm watching that relationship very, very closely but is it my question that I don't know the answer yet is it still relative to the US dollar like it was, say, a year ago, or maybe it is still right now, or does it become less, the relationship with the yuan against the dollar become less relative, given that they're getting commodities in other currencies? So I don't have the answer for that right now, but that's something I think is going to be of the utmost importance of the next
year. So something more meaty about the currency debate. When you look at the ruble's appreciation over the last couple months, and you look at the fact that what you just mentioned, that China and India are buying crude at a discount, and our alleged partners in this whole global thing, Europe, is buying crude at a huge premium. Where are the embargoes that we as a country pushed and advocated for? It seems like it's nonsense, and it's absolutely having the exact opposite effect what was supposed to. Any thoughts on that?
Oh yeah, absolutely. It's having having an opposite effect on it, because it's putting all the power in Russia's hands, and they're going to sell at a discount because they're getting it in rubles, and the rubles appreciate 30%. It's no brainer.
Yeah, Bobby, you got thoughts on that? Is it idiotic?
No, it's not at all. I mean, they're selling every single barrel of crude oil that they're taking out of the ground. And I actually took issue with a Bloomberg reporter this morning who said that, they're going overseas now to have a discussion on how to cap Russian profits on crude oil. And I said, how do you cap profits when you're not involved in the transaction? How are you possibly, what policy could you possibly pass? The only thing they could do is put pressure on India. They can't put pressure on China. And the pressure on India due to the discount is not going to work. So again, we go back to Billy's original point about convoluted energy policy. You too, Jim. Well, if policy is not consistent, you literally have no effect on what direction the price of crude oil can be driven in, which is why long-term, I'm going to be looking at longs. I'm the same as Billy. I've owned gold since July of last year. And I'm actually very satisfied with the very little money I've made on it, because gold should have collapsed multiple times and did not. And that tells you a lot. There were multiple scenarios over this last 13 months or 11 months rather, that I've held this gold position that it should have collapsed, and it hasn't. It's really held in. And I think part of that reason is the war and some of the effects of it in the commodity space.
Yeah, so if we're going through disinflation right now, and look back, I mean, this is obviously not a March 2020 disinflation event, but look at gold, happened to gold, at the onset of the event, and went to 1,700, and then it collapsed like $150 to maybe, I think it was maybe $250, 1,450 did it go to? I mean, but that embodies, what gold will do during a disinflationary event. And I mean, this is disinflation right now. Gold's holding above 1,800. I mean, it's been trying to build a nice little floor above 1,800. I'd say this is extremely constructive. If it's able to hold through this inflation here for the next 30 days, when the Fed then is able to kind of pull their foot off the gas, gold's going to rip higher.
And you think silver the same?
Yeah, absolutely. Silver, I would have loved to see it hold out above, what was it, 21 and a quarter, 21 and a half, which was a bigger level. It aligned with the Brexit breakout that failed. And I think it was like a 50% retracement from the COVID low to the initial February 21 high. But it's still holding about $20. We're back above 21 today. It's been pretty constructive. So I like what gold and silver are doing. I mean, these are areas you want to buy it and just know your risk to the downside.
So Bob, to Bobby's point about energy a second ago, there was an interview with Mike Wirth, the CEO of Chevron, a couple of weeks ago. And he said, and Bobby makes this point all the time, and we've said it a couple of times in the podcast, but a lot of people haven't watched every one of the podcasts because they're stupid. They should watch every one of them. But we'll say it again. Mike Wirth said there'll never be another refinery built in this country, ever. He was sure of it. He said, in order to build a refinery, you need to have a 10-year look forward on when you're going to start making money. And energy policy in this country bounces around like a freaking pinball. So there'll never be another one built. Bobby has even greater statistics on that. It's absolutely confounding when you think of how important crude is and how poorly it's treated by certain facets in the administration. You agree, Bobby?
I do. You can get away from carbon fuels. You can. I have no problem with that. I said this on Sheldon's show the other day. Obviously, all three of us go on
5 times we've mentioned Sheldon now.
Yeah, that's insane.
Heck of a promo for a show here.
I know, it really is. But I said it on his show. I mean, to me, it's like, who doesn't want clean water and clean air? I mean, everybody wants it. Like, who doesn't? Billy, you're an outdoorsy kind of guy going up, to I'm not going to mention where you have people chase you. You're so handsome.
Beautiful up there.
I mean, you like nature. We all like clean air. We all like clean water, but you can't get away from fossil fuels overnight pain-free. And that's sort of what they've implied they want to do. And when you aren't doing consistent lease sales, when you have, when I entered the business, there were 279 refineries, about 109 now. Pipelines get shut down. Yes, the Keystone pipeline was going to move Canadian oil, but it's the entire shipping structure of crude oil that got affected by that pipeline not being available for Canadian oil sands. So, I mean, when you're doing these kinds of things and then this happens and you try, somebody said to me, every administration, this is not a political statement. It's not a political subject to me. Every administration has bonehead policies and they end up paying the price for it. This is not political. The energy policy has been bad in the US for the last probably 4 administrations, simply because it's not been consistent. It's been back and forth and back and forth. And when you then go to them and you say, you got to help us with this Putin price hike, it's nonsensical.
To put a finer point on that is that people accuse me of being political all the time, and it is so infuriating. This is dumb energy policy. My daughter's a environmental engineer. We talk about this all the time. One of the reasons she got into it is because I'm a big fan of conservation. We have a home in Colorado. We believe in going on hikes. You take nothing, leave nothing. We're very, very conscious of the environment. I want to switch to green energies but what's happening now is going to actually push that further away. Because if we disrupt this, we just keep this pendulum in motion. Billy, you got anything on that?
I agree. You agree totally. I mean, I don't think anything to add to that. It's right. I mean, you're a realist. Let's say that.
Well, yeah, and when we disrupt the apple cart, look what happens in Venezuela. It's bad environments when the government takes over and then there's no consistent policy and no capitalistic means of pursuing things, and then things fall to hell. And this is just absolutely ridiculous. Bobby, you wanted to hit cryptos before we go to the trade part of it. So, Bobby, you want to key that? I want to know what the hell are cryptos? What are they a hedge of? What are they? Are they just a risk asset?
I don't know if I want to necessarily. I mean, I think I'm stealing this from OJ Rennick from TD Ameritrade. He called them a high beta store of value, and I really like that. I think people looking at their recent performance would say, how would you possibly call it a store of value? Well, it is high beta. We did say that. And it's certainly not a currency. I mean, at this stage, I think it has to become one in order to survive. But I pulled this up because I wanted to show this to you guys, because I'm going to do in the trade segment of our podcast, I'm going to do an Ethereum trade. But I pulled this up because I exited all my cryptos in March. And I'm very fond of saying that, I don't know if you guys can see this. I'll actually send the editor. That's a clip of me saying Bob Icino is completely out of crypto. It's the TD Ameritrade interview where I said I'm out of it. It's March 30th or something like that. I'm very fond of saying that in my 29-year career, I've bought the low and sold the high 4 times. I think I can make it 5 with that March crypto sale. It
Nice.
actually, cryptos rallied after I sold them, to be honest. They rallied up another 8-9%, and then they fell from there. But I do think that, to Bill's point about capitulation, I think we've seen short-term crypto capitulation. On the 15th of June, volume in the crypto futures, the Ethereum future specifically, were the highest ever at the CME Group, highest volume they'd ever had. And we got pretty close to what many people who are deep in this world tell me is the break-even price for Bitcoin miners, which is 18,000. So because of that, I like the bottom here. I mean, I like this as a short to medium term bottom for crypto, because the second wave of capitulation would be just the dead strong. I'm not going to say that word they use. The dead strong long-term holders would have to get out if people stopped mining it, because it costs too much to mine it. So I think cryptocurrencies survive. I think Bitcoin survives, but I think Bitcoin is much, much more worth looking at down around 11,000 than it is here long-term. But I am going to go long now.
Billy, we said the word capitulation. You said it like 3 times. Bobby just said it once. And in crypto, I 100% believe it's true. And one of the things I base that on is that people are scared to say anything positive about crypto over the last couple of weeks for fear of ridicule. Like, it is totally not cool to bring up Bitcoin or Ethereum right now. But in stocks, you said you thought you saw capitulation too. And do the statistics really back that up? Are people really getting out of their stocks, Billy?
Unfortunately, I mean, I've talked to, not to get into too many particulars, but clients that are new clients that have come to me, and they've taken, they had a great 2021. I mean, you could the whole board was a bullseye, and then they're down 40% the first half of this year, and they're looking for another answer. But I've told too many people, like, you can't sell your whole portfolio now that you're down 40%. I wouldn't even let my grandma do that. And but those type of conversations are very common. And I think that's part of the capitulation.
People just has to rewatch the George Costanza investing method from that Seinfeld episode, which, by the way, it's very valuable. I'm only half joking when he says that when every fiber in his body and his mind tells him to sell, he buys.
Yes, the opposite episode.
And I think it's fantastic, right? Bobby,
we do some business with a company that does multiple things. We do some analysis for them, some white label analysis at Path, and I'm privy to their customer service emails. And without getting too specific, because I don't want anyone having any clue what company this is, some clients, it's desperation in the "do you think crypto will rebound" comments. I mean, one specific, the guy said, I was up 2 million, now I'm down 2.8 million. And I'm assuming the 8 was probably the initial investment. If there's some really, really ugly things going on. And I think 5 years from now, we'll all feel pretty lucky that those of us who invested money we could afford to lose, whether we took profit or not, as opposed to people who are dumping everything into it.
Yeah, and that to me, that is heart-wrenching to hear that story. And I know
really
there's a lot of people that way, but we've been in the business a long, long time, Bobby and I. Billy, not as, I mean, at least I hope you look young. I think you're young, but the point is that we see.
I've been trading for 2 decades. See if I can say now.
Okay, nice, very nice. But we meet people who don't understand risk and it's just really, really sad when. And that old thing, a fool and his money are soon to part. And these people aren't fools in everything. In many ways, they're very, very intelligent people, but they just don't understand the risks that they're taking and what's the worst that could happen. By the way, when my wife always says, "Oh, what's the worst that can happen?" Usually what she's talking about could easily result in death, dismemberment, or terrible things. So I'm always like, you don't use that, right? Because I can think of the worst thing that can happen here. So, but anyway, let's move on to the trading portion of this, because it is Friday. And Bobby, I know you have a drink in your hand, but I want to have one soon. Billy, you're going to stay with us to talk about trading?
Yeah, I'm here, and I'll add just real quick. I've worked in the brokerage industry for years, so obviously my wealth management, but the brokerage industry, I've seen it all. And I've seen retail investors do, they're not people doing their own decisions, and you see the worst decisions. You learn a lot from seeing even just small money and big money make those bad decisions. And it's definitely a lesson, kind of seeing those same mistakes by different people.
Big money, particularly pension funds, because that's usually somebody's brother-in-law who has absolutely no qualifications, who was given $5 billion to run a pension fund.
Yeah, it's funny. That's why I kind of want Billy's background is kind of why I want to encourage people to check out Blue Line Capital, because if you're looking for somebody who is going to try with all his might to not let you mess things up, it's Bill Baruch, just for the record. But so considering that I just basically shit on crypto, I'm going to do a crypto long here. I'm going to do a micro ether trade. All right. I'm actually in this one. Okay. So I bought micro ether today at 1207. Now, micro ether is a great place for people to speculate in crypto because it is tiny. These are tiny contracts, right? So I'm in at 1207, and it's really only because there's a double bottom and there's nothing in my way target wise that's going to stop me from reaching the target and get people maybe in with a second bout of capitulation. At least fingers crossed. The chart looks really good for me on a daily. It's a tiny, tiny little double bottom. So it's definitely a speculative trade. My target's 1375, and that's a measured move target on this with an entry at 1207. The trigger was around 1193 or so. Don't quote me on that particular price. But bought at 1207, target 1375, stop price is 1078. You're risking $12.90 per contract to make $16.80 per contract. So I've obviously got multiple contracts on, but if you wanted to just see, how does this trade? How does it feel? You could do a literally risk less than $15.
Yeah. So that's why, again, and I don't mean this to sound like a commercial, but I really think when the CME launched the suite of micro contracts, it's such a wonderful thing for people who want to experiment with futures. Futures have risks. We have disclaimers all over the place. Futures have substantial risk. We talk about mitigating risk. Back to your ether trade real quick. Bitcoin has a level that I think at like 22,000 that I thought if it can close a bar above that, I think it's heading much, much higher. Do you look much at the correlation between the two? Are you looking at both charts, or are you just looking at ether?
I don't actually lately. So not so much lately, but say about a month or so ago, Bitcoin was actually at a slightly higher correlation to the NASDAQ than it did to Ether, which I thought was interesting. Ether is interesting from a structural standpoint because they're trying to switch from proof of work to stake. And that basically means you don't have to have the complicated mining mathematical calculations done by a computer that uses up all that energy in order to establish the transaction on the blockchain. They haven't made that switch yet. So you might actually, they're having problems with actually getting the mechanics right. So you might actually see a decisive decorrelating of those two down the road, but the pattern isn't in place in Bitcoin. While I think they'll probably both follow the path, the pattern is only in Ether, so I can only measure the target in Ether.
Billy, when I ask you to comment on this trade, I'm gonna put a specific light on it and see if you agree. Do the nastiness that have happened in some of the off-brand coins over the last couple of months, stable coins, the Celsius project, whatever the hell that thing is called, and those getting just pummeled, and then the rumors of Bitcoin and Ethereum having to be sold because they were held as collateral for those things. When the dust all settles, do the two biggest coins become much more important because they're broadly held, and in contrast to those little crap coins that they look great?
With that, that's a very good question, and I'd like to think that it's going to be typically you see Bitcoin and Ether make a move, and then the other ones sort of follow just right out on their tail, but the other is increase at a higher percentage. So for myself, I agree with this trade. So for myself, Sunday morning, I bought Ether and I bought Solana. I bought Solana about $30. I actually forget what I bought Ether at, but the smaller number, easy to remember, is the Solana. Yeah. But and then Sunday night I manage clients at the brokerage. I manage a CTA portfolio. I bought micro Bitcoins, four portfolios, 20,800 on the July contract micros. I love the micros. I only use micros, and just to be able to size my positions perfectly. It's terrific. Even the micro copper recently. So I totally agree with this. Previous high, the 20,000 level that back in winter 2017. So yeah, we're testing right into that. And then, you talk about the blow-ups. What's another term for blow-up? Capitulation, basically. I mean, all that volume from that blow-ups, I mean, you're getting capitulation there. And so, capitulation of headlines, I mean, everything. So I totally agree with this, but I really want to see some construction. I want to see some follow through. Some people texted me today, some clients like, oh, wow, crypto's not doing anything. The stock market's up so big. I think this weekend, if crypto is not decently higher over the weekend, I'd be worried.
So let's move. First of all, we've said capitulation now 10 times, Scott Shelley 5 times. I'll buy a beer to anyone who can work capitulation and Scott Shelley into the same sentence in the remaining 5 minutes we have on this. Bobby, can we move to my NASDAQ trade?
Yeah, before you go to it, though, I think I'm going to slot in a little video of myself telling people at the start of this podcast that you can play a drinking game with this podcast. Every time we say Scott Shelley or capitulation, take a drink.
And it better not be something hard because you will be hammered.
Oh,
It
yeah.
should just be beer. Again, risk mitigation is what we're talking about here. Okay, so the NASDAQ, I do not have this trade on. The reason I don't have this trade on is because I went into this week long some options. I talked to Mike Coe, if you guys know Mike, about trades that gain delta as they go higher. And I put on some calls at the beginning of this week where I sold a call spread above the market and bought a way, way bigger call spread above the market to see how it play out because I thought we were going to have a rally. So I've been gaining delta in the S&P all week, and today gained massive delta in the S&P. So I can't really afford to put on another long. So this is a trade that if I was flat and wasn't so exposed or ready to the long side, that I would be putting on. I've been long the NASDAQ a couple times today, but I flattened out because of those other trades I have on. So the micro September NASDAQ, I'm looking at buying it at 12,100, which it may have, as we started talking, gone above that because I thought that was a little bit of a breakout with a target of 12,950 on the upside and then a stop place below at 11,700. This is the SEP micro NASDAQ. If you hit your target, it's 850 ticks. This is a longer term trade than just a bang bang day trade. This is a couple days thing. If you hit that, make 850 ticks at $1,700. And if you get stopped out of your level, you lose $800. Again, this is the micro NASDAQ, but there's a lot of volatility in NASDAQ. So there's still some risk. This isn't the Ether contract we're talking about. First, Billy, what do you think of that trade?
I like it. I'm long micro NASDAQs right now. By the way, I mean, it's been 800-point move in 2 days. So, I mean, I agree with it. I trimmed a quarter of my position today as in the S&Ps and micro NASDAQs for all the portfolios, everything I'm managing into 3,900, just because I wanted to, okay, if this thing was rejected, I would just be depressed over the weekend. I didn't take anything off. And then, my target on the NASDAQ was, it should clear. If the S&P got to 3,900, it should clear its gap. That was 11,850 or so. The 21-day moving average, 12,060. There's a retracement, 12,021. We got through that. This tells me path least resistance, should be higher till quarter end. And I like the trade.
And again, we talked about it earlier in the show, and I didn't want to belabor the point. Part of it was rate exposure. I think rates aren't going up as fast as they were. The NASDAQ should outperform. Bobby, thoughts?
Yeah, I like this trade. I think we're in a medium term, sort of a bear market rally here. I did this trade basically in individual stocks. I didn't do it in futures for very similar reasons to you. I still had the silver position on that I mentioned last week, and I wanted to put on this Ethereum trade, et cetera. So rather than, I did it in actual stocks, and this is more of a futures podcast, so I don't feel a need to go into the stocks themselves. But yeah, I like this trade a lot. I think you're going to get paid on this one.
Okay, my last trade. We have enough time for one more, right?
Yeah, we do.
10-year. Now, this is essentially I've talked about the same trade for the last 3 weeks. I'm going to do it again. Sometimes you just look at a chart, you just look at a psychological level, and when you know exactly where your stop should be, then it looks to you like a decent trade to the upside. The 10-year has had very difficult time coming back down through the 3% level. The 2-year did it just fine. It bounced back up from it, but the 2-year came down below 3% just a couple of days ago. So I still think, and again, the fundamental reason for being, when we're saying that I think rates aren't going up as fast, the 10-year could go up. I'm mostly talking about the short-term rates if they start to pull back stimulus, because then potentially the long end rates could rise. So I think it's a buy at 313 with a target of the psychological level of 4% on the upside. This is the June micro 10-year, CME's suite of micro products, and a stop placed at 2.80. clearly below a clear break of the 3% is where the stop is. Is it stupid just to think to fill in the fundamentals on a trade when you look at a chart and know exactly where your stop should be as your first thing? Bobby or Billy?
I like the trade. I don't have any positions on in the 10-year. I obviously think rates are going to be, like you said, they're not going to be, rising at a fast pace right now. I think it's been digested. I like tech because of that. I'm overexposed in other things, that I don't have anything on here. But the 10-year.
No, you just said overexposed, and you don't have anything on in the same
overexposed in the future, long.
Oh yeah, gotcha.
Yeah, long S&P, long Nasdaq, starting to build positions in micro copper and stuff like that. But the 10-year did hit the 21-day moving average yesterday. Hit it again today. Couldn't get through it. That's the breakdown point from the on the heels of the May CPI number. So if you're trying to buy yields, this is where you do it.
Bobby.
Yeah, I'm a little worried about this one now, but I still see it as a longer term trade, and I think the stops and the targets are wide enough away that you might be okay with this. It's interesting to look at over the last 7 sessions. 10 years dropped 38 basis points.
Mm-hmm.
I mean, wow, we almost dropped below 3% this week on the 10-year. I actually got a slight memory challenge for you guys, because I'll tell you what, this shocked the hell out of me. A year ago, where do you think the 3-month yield was? Now, full disclosure, what did it close today? 170?
3-month yield a year ago, I'll say 0.18.
20 basis points.
I said 18.
5 basis points.
5 basis points. Okay.
5 a year ago. That shocked me. I thought it had to be somewhere around. I was
20. Closer by 2.
I thought it had to be somewhere around 20, to be honest. So I'm worried about this trade a little bit, but again, I think you're wide enough where you're not going to get crushed.
Okay, Billy, last questions for you. When you talk about going to your cabin in the woods, is it really a cabin, or is it like my cabin in Colorado that has Wi-Fi and beautifully comfortable beds and perfect heating and cooling? Is it a cabin or my kind of cabin?
No, there's no AC, but there is Wi-Fi.
Okay, good. And you have television?
Television, cable.
And comfortable beds. You're not sleeping on the floor or anything, right?
Yeah, comfortable beds. Yeah.
Okay, frankly, I'm sick to death of talking to you people. Do you guys concur?
Yeah, I have a quick thing to throw out, really, for people who are watching the trades at all. Last week, I put on a silver short, right? And my target on the silver short was 2042, and we got to 2054 half. Okay. I have a rule, and I feel like I should talk about it, that if we get to 70 to 75% to my target and something is happening, I get out of the trade. The weekend is enough, given the volatility that we've had lately, and given the fact that there's an actual live war going on. So I ended up getting out at today's close, which is a drastic reduction from what I hoped to make from it. But it was a profitable trade, and I am out of it. I just want to throw that out there. That's just a rule I've always had.
Oh, and to add on to that, from last week, and some people asked about it on Twitter about my ES trade that I had on from last week. Had on synthetically, but it worked perfectly. It did go to my level, and I got out. The 10-year trade hasn't moved to my level yet, nor has it moved to my stop level either. So 1 for 1 for last week. And so, yeah. Are we good? Billy, you good? Thank you so much for joining us. Bill, where can they follow you on Twitter?
At Bill_Baruch.
Okay. You put out a lot of good stuff. Bobby, I want you guys to have a good weekend. Can I be the first to hang up? Nobody's going to mind, right?
Nope. See you, Billy. Thanks, buddy.
Yeah, thanks.